Welcome back to the Velocity channel, where this is your bridge to financial freedom. What you see on the board are not dreamed up numbers. These are real numbers, real people in real trouble in their situations. They're having trouble with their cash flow. Sometimes it's negative cash flow, sometimes a little bit positive cash flow, and they want to know how to pay off all of their cash flow sucking loans, and we help them do it. All right, so this is what we're going to do. We have the numbers here. We're going to help this person, Joni, shout out, get rid of their loans. They just don't want them anymore. But before we do that, I want you to like, share, and subscribe so everyone around the world can know the power of Velocity Banking. So without further ado, let's jump in. We have, like we always do, an overview, okay, of what we have here in both the lines and the loans. Now, this particular person does not have a line of credit per se. All they have is credit cards, but it is in the amount that is $15,000 or near there, all right? $600 each month. And since they did not give me the interest rate, I'm gonna put an astronomical 30%. Now, CJ, why would you put an astronomical 30%? Why? Because I want you to know that when you're dealing and implementing Velocity Banking, the interest rate does not matter as much as time and balance. And that's all we leverage in Velocity Banking is time and balance. We're going to get back to that. This person did share that, listen, regardless of how much they make, they do have a cash flow of $1,000. It's going to be very, very instrumental in paying down these loans. Now, one of these loans is a 7-year auto loan, all right? $25,000 at 7%. That's going to equal $377 each month that is coming out of their pocket in minimum monthly payments. 30 years, what is that? What does that look like? That's right, that's a mortgage. $370,000 at 2.99%. That is $1,695 each and every month that they are shelling out. Now, just as a recap, don't think about these numbers when you are getting any loan. It doesn't matter if it's 109%, okay? We're gonna help you get way lower in the Velocity Banking method than 2.99%. And that's a pretty good rate, right? We're going to help you get way lower than 7%. Not by negotiating, okay? And there's nothing wrong with that, but by implementing the Velocity Banking plan the correct way. So here we go. First of all, we want to go ahead and take a look at this $15,000 balance, and we want to get rid of it. Is that okay? Right, so let's get rid of that $15,000 balance. We're going to make sure that our income is placed inside of our lines of credit, and we're going to make sure that $1,000 is parked inside of our lines of credit, okay? What that cash flow is going to do is it's going to be paying down your loans so that you never, I say never, have to worry about paying a minimum monthly payment. Remember, because you're using your lines as your new checking account. Now, let's go ahead and take the balance, which is $15,000. Okay. We're going to cross out these zeros here. And that's how long it's going to take us to pay off those lines of credit. It's going to take us 15 months. Now, since these are real numbers, I got to get real with you. The higher the cash flow, the faster the debt payoff. So that's why we're at the 15 months instead of lower, okay? But that's okay. You know why? Because it's still going to be less than 7 years. Now, guess which one of these loans we have to tackle first? Do you remember why? Cash flow index method. That's right. So the most cash flow sucking loan out of the mortgage and the auto loan is going to be the auto loan. So let's go ahead and take a look at that. What are we going to do? The minute we go to the car dealership, okay, we paid up our lines of credit, we're back at $15,000. What do we want to do? That's right. We want to go ahead and pay down that principal so that we can cancel as much interest as possible. So here's what that is going to look like. What I need you to realize is that it's never too late to implement the velocity banking method. And this is why. Even if you've been paying the $377, by the way, your $377 is split up. So it's split up between interest and principal. So you're not paying the full $377 to the principal. What you're doing is you're paying a portion of it. So if you say, you know what, I've paid up my $15,000, I'm going to now deploy the $15,000 from my line of credit or from my checking account or from my IRA, my useless IRA, or my useless 401k, and I want to go ahead and make my money work for me. This is what you're going to do. You're going to jump ahead 55 months. So it's just like getting inside a time capsule and jumping ahead years, almost 5 years, to the 55th month. And you are already at $60 interest. You're already at $317 principal approximately. And you are at the $10,000 mark. Why? Because you've already deployed, right, $15,000 to the balance of $25,000. Okay? So you're already right here. Now, it took you 15 months to pay off the line of credit, right? Because guess what? You don't have a minimum monthly payment. You are now using it as your new checking account. So that cash flow that is left in there is what's paying it off. So for you, that may be 13 months to pay it off. That may be 12 months to pay it off. Maybe it may be 16 months. But as soon as you reach that number, whatever it is for you, you can start deploying your troops. Because remember, money are Marines, right? Money's Marines, money's soldiers. So you're going to deploy them towards the principal balance because that is our enemy, debt. Now, what we want to do in this is not only show you $10,000, but what's going to happen in the next 15 months when you deploy, right, that $15,000 again. Remember, it's going to be replenished because we are already at 10,000, right? What does that mean? That means we're not going to deploy the 15,000. Perhaps you only want to deploy 1,000 now, right? Maybe you want to deploy 2,000 or 3,000 towards that principal balance. Well, you can do that. You have more flexibility. And I just want to say that because you have implemented that, you're nowhere near 7 years. That means all the interest that you would have been paying the bank, you're now paying yourself. So what is that? 15 months, okay, goes by. You got to replenish it because let's just say you walked into the dealership, was so excited, right, and said, hey, $15,000, here you go, right? Perfect. That's 15 months plus another 15 months, right, to replenish that. And correct me if I'm wrong, but isn't that about, what, 30 months instead of the 7 years? Now, 30 is still less than 84 months, right? So that's how much in interest that you've saved. That's how much cash flow is now going into your wallet instead of the bank's. But guess what? We also want to pay off our house, so this is how it's done. Now, I know this is unbelievable. I know this is unbelievable. 12 and a half years, you're going to pay off the house? $1,695 each and every month? Yeah, that's already in the budget, buddy. It's already in the budget. And plus the $15,000, remember, you are not, this is more than a bill. The line of credit is more than a bill, okay? When you're using it the velocity banking way, it's way more than a bill, all right? So you just paid off, okay, your car 30 months, okay? And 30 months plus, what, 12 and a half years. And I'm talking about $370,000 at 2.99%, guys. All right? And some are going to be lower than that. Why? Because they're having a system. They already have a system. The system tells them, hey, you don't have to, for instance, you don't have to chunk $15,000 at one time if you don't want to. We can do $3,000 here, maybe $2,000 here. 1,000 here. But it tells you the date. It tells you the time in which to transfer. So what is it all about? It's about a plan is what it's about. Okay? You're going to go ahead and deploy the $15,000 towards this principal. And while that line of credit is being replenished, what's replenishing it? The cash flow. Okay? You're not writing out a check, right? You're not saying, can I make a payment for $1,000? No. You're already using your line of credit as your new checking account. So notice the 2.99% does not apply because you're not paying 30 years. The bank wants you to pay forever. You're not going to pay forever. You're going to pay approximately 12 and a half years, right? Maybe even less, right? Because you now know how to pay off the bills. You now know how to pay off your debt obligations. You need warriors. And that capital that you're building is your warrior. So whether you have a savings account, an IRA account, a 401k, whatever you have, a line of credit, you can build that up, but you don't build it up just to save, right? There's a plan for that money, and that plan is to deploy. Soldiers don't go to basic training so they can sit there. Soldiers go to basic training so they can defeat the enemy. And that's what you're going to do. You're going to defeat debt, the enemy in your life. Folks, please take a screenshot of this. Please let me know how I can help you. I actually am probably going to be staying up because I need to get those debt-free dates. I need to get those plans and lesson plans to you. Absolutely, we're going to make sure that you have them. Those that have hopped on in and let us know about that, don't worry, we got your back, and we're going to be staying up tonight, making sure that those get done. We appreciate you. God bless you. Let me know if you have any questions. You take care.